All right, let's dive in today, shall we? We're going to be cracking open the books, so to speak, on Marico Ltd, their latest quarterly results, that is.
Sounds intriguing.
Yeah, it is. Now, the name might not ring a bell right away for everybody, but I guarantee you, you know their products.
Oh, I bet I do.
Yeah, particularly if you're in India. They're the folks behind, like Parachute Coconut Oil, Saffola, those big names.
Okay, starting to get the picture. Big consumer goods company.
Exactly. But here's what makes this deep dive even juicier, right? Marico, they're not just sitting pretty. They're making some serious moves, trying to break into new markets.
New markets, huh? What kind are we talking?
Think food, for one,
Yeah.
and then like all that digital personal care stuff that's blowing up.
So this is about more than just their numbers. It's about their whole strategy.
You got it. And to really get the full picture, we've gone all out. We've got like their official letter to the stock exchanges, the nitty-gritty financials.
Of course, gotta have those.
Oh, yeah. And then there's this investor presentation.
Yeah.
Slick as can be, really. Plus the press release, naturally. But the real gem.
Let me guess. Earnings call recording.
Ding, ding, ding. We get to hear the exact, unfiltered, So we're not just going to be saying what happened. We're going deep into the why.
The why and the so what, right? That's where the real insights are.
100%. So first off the bat, we got to talk about this growth they've got going on. It's impressive, to say the least. 15% overall revenue growth.
15%. That's not too shabby at all.
Nope. And get this, their India business. Highest volume growth they've seen in 13 quarters.
All right, that's saying something. They're definitely not standing still.
Not even close. And it gets better, or, well, broader, I guess you could say. Their international business is on fire, too. Up 16% in constant currency terms.
Hold on, constant currency. You got to break that down for the folks at home who aren't finance wizards.
Right, right. So basically, even if you, take out all the craziness of how currencies go up and down, they're still killing it overseas.
So it's like their real underlying growth, no matter what the rupee or dollar or euro is doing.
Exactly. Shows they're not just riding some currency wave. It's real expansion.
Mm-hmm.
And to capture the mood, I actually snagged a quote from their MD and CEO, Sagar Gupta, straight from the earnings call.
Oh, let's hear it.
He said, and I quote, "We have delivered a considerably resilient performance in this quarter with the highest underlying volume and revenue growth in 13 quarters.
Huh.
I think that resilient part is key.
Resilient, huh? Because it hasn't exactly been smooth sailing for everyone out there, The global economy and all that.
Right. So for them to pull this off, it's a big deal. But like you said, it's not all sunshine and rainbows. They've got some hurdles to jump to.
Well, that's business, right? Let's talk about one of those hurdles. What about Parachute, their big coconut oil brand?
Parachute. So they managed a decent 3% volume growth, which, again, sounds good on the surface.
Yeah, on the surface. But there's always more to the story, isn't there? What's the catch?
Catch is they had to get a little creative
Yeah.
to make that happen.
Creative, huh?
Do tell.
Okay, so instead of just jacking up prices because, the cost of copra, the coconut stuff, has gone nuts.
Gone nuts, literally.
Right. They actually, sneaky as can be, reduced the volume in one of their key packs by just a teeny tiny 1%.
Wait, so they made the package a little bit smaller, like a stealth price increase?
You got it. Trying to fly under the radar, keep customers happy, but also deal with these insane costs.
And just how insane are we talking? Give us some numbers.
Okay, so brace yourself. The investor presentation says copper prices are up 38% year to date. That's huge.
Oof, 38%. That's going to make a dent.
Yeah, no kidding. And it's not just the coconut oil, right? Rice bran oil, which is what they use in their Saffola brand, that's up 19%.
Ouch. So it's like a double whammy of rising costs for them. Tough spot to be in.
You can tell it's weighing on their minds, too. Back to Mr. Gupta on the earnings call. He said, "We will closely monitor consumption trends with this high pricing and the transient impact of inflation." Transient impact, that's what they all say. But who knows how long this inflation thing is going to last, right?
Exactly. So they're walking a tightrope. They got to stay competitive, keep prices reasonable, but also make sure they're, actually making money.
It's a balancing act, that's for sure. And it brings us to why this whole diversification thing they're doing is so crucial.
The big D word. Diversification. Honestly, it was the theme song playing throughout every single one of these sources we looked at.
So they're not just dipping their toes in the water here. They're going all in.
Cannonball, head first, the whole 9 yards. And the numbers back it up. Their foods business is about to hit all 1,000 crore in annual revenue. That's like $127 million US for folks keeping track at home.
Okay, so not chump change. That's serious money.
Oh, yeah. And hold on to your hats, their digital-first brand portfolio, already at 600 crore annual recurring revenue, which is like $76 million US. This is not messing around territory.
All right, so what are these magical new brands? Give us some names.
So we're talking Saffola Oats, right? There's True Elements, Clicks, which is all plant-based nutrition stuff.
I'm seeing a trend here, lots of healthy stuff. Smart move, tapping into that whole wellness wave.
And then there's Beardo, which is men's grooming. So they're branching out big time. They're not just the oil people anymore.
And it's not just like vanity projects, right? This diversification is making a real difference in their bottom line.
Oh, yeah. These new ventures, they make up 21% of their domestic business now.
21%, up from what, like 15% last year? That's a huge jump. Shows they're putting their money where their mouth is.
And remember that Gupta quote I mentioned earlier about their food business hitting their goal?
We finally reached there.
That's the one. He was practically jumping for joy on that call.
Yeah.
And I get it. It's a big win. But here's what I find really interesting.
Lay on me.
It's not just about growth for the sake of growth. These new ventures, they're starting to turn a real profit as they get bigger.
Now that's the sweet spot, right? Growth, A&D profitability, the holy grail of business.
You said it. All right, we're back and ready to roll up our sleeves, get into the nitty-gritty. Financials time.
The heart of the matter.
You said it. Full disclosure, when I first laid eyes on that consolidated P&L statement, my brain went a little fuzzy.
Happens to the best of us. Lots of numbers flying around. But like I always say,
Numbers tell a story.
bingo. And Marico's story. Well, it's one of resilience for sure. And some smart investing, even with all those rising costs we were talking about.
So give it to me straight. What's the headline here? What's the first chapter in this financial tale?
First thing that kind of jumps out, gross margin contraction. It's down about 180 basis points year on year.
Hold on. Basis points.
Yeah.
Got to translate that for the non-finance folks out there.
Right. Fair enough. So basis points, it's just a fancy way of talking about changes in percentages.
Right.
So 180 basis point drop means their gross margin, which is basically the profit they make after you take out the cost of all the stuff they
The
swap.
goods sold, right?
That's it. So that profit margin has shrunk by 1.8 percentage points.
Okay, got it. So bottom line, for every 100 rupees they bring in, they're making 1.8 rupees less in profit compared to this time last year.
You got it.
And I'm guessing the prime suspects here are those crazy copra and vegetable oil prices.
You nailed it. They have tried to raise prices a bit, but not enough to totally offset those costs. Gotta remember, they're walking that tightrope.
Trying to keep customers happy, but also, keep the lights on at Marico HQ. Makes sense. But then I noticed something interesting. Their ad spending, like their marketing budget, it's up a lot, like 19% year on year.
Interesting, isn't it? Not exactly shying away from investing in their brands, even with the pressure on their margins.
That's what I thought. It's like they're saying, hey, we're not going to let a little squeeze stop us from building for the future.
Exactly. Playing the long game, they're betting that strong brands, loyal customers, that's going to pay off big time down the road.
Love that mentality. So let's talk bottom line impact. Profitability. After all this, where does it stand?
So, despite all those headwinds, their EBITDA, that's earnings before interest, taxes, depreciation, and amortization.
You lost me at amortization.
Cycles. Fair enough. Basically, it's a way to look at their core operating profit, and that's still up 4% year on year.
Okay, so still growing. Not bad.
Right. But the EBITDA margin, which is just a way to see EBITDA as a percentage of their total revenue, that's taken a hit, down to 19.1%.
They're growing, yeah, but not as fast as that revenue growth we talked about. It's kind of like 2 steps forward, 1 step back.
Yeah, something like that. Shows you the kind of environment they're dealing with. Complex, got to make some tough choices to balance things out. But hey, let's not forget, they also announced a nice dividend. 3.50 per share.
Oh, yeah. That dividend, always a crowd pleaser, shows they're confident enough to share the wealth a bit.
Exactly. Signals they're feeling good about their financial position.
Before we move on, there's one thing I'm curious about. Working capital. How are they managing their cash flow, especially with all these investments going on and these cost pressures?
That's a sharp question. So to get a handle on that, we got to peek at some key ratios. Debtors turnover, inventory turnover, and net working capital days.
You have to break that down for me.
Of course. No jargon here. Basically, these ratios, they tell us how fast they're collecting cash from customers, how quickly they're selling their inventory, and just how efficiently they're managing that whole cash flow cycle.
Got it. So the faster they collect, the faster they sell, the better they're doing.
Exactly. Lower numbers on these ratios are a good thing. Efficiency is king.
So what's the verdict? How's Marico doing in this department?
Honestly, pretty darn well. Their debtors turnover, which is how quickly they're getting paid by customers, it's around 43 days. Inventory turnover, that's a 49 days. And their net working capital days, that's like the whole cycle from paying suppliers to getting paid by customers, that's about 44 days.
Those are some decent numbers. They're keeping that cash moving.
They are. Even with all the pressure, they're not letting their cash flow get bogged down. Says a lot about their operational efficiency.
All right, so we've got a good grip on the financials. Let's zoom out a bit. Go back to their big picture strategy, right? Especially this whole thing about not being so reliant on oils.
Yeah, diversification, their top priority. Clear as day. We touched on their success in foods, the digital brands.
Right, right. But I'm curious, how do you see this fitting into their long-term game plan?
Well, to me, it's brilliant, especially given everything we've talked about with these volatile input costs. They're not just reacting to a tough situation, they're building a business that's more resilient, more diversified, less vulnerable to shocks.
Smart, like not putting all their eggs in one basket.
Exactly. They're building a more balanced portfolio of products, revenue streams, and they're not just dabbling. They've set some pretty ambitious goals for these new ventures.
Ambitious, huh? How ambitious are we talking?
Well, for starters, they want to double the size of their foods business by FY27 and double the exit annual recurring revenue of their digital-first brands in the same time frame. That's a big leap.
Not messing around, that's for sure.
Nope. But based on what we've seen, the progress they've made, the strategies they've laid out, it's not out of reach.
They mentioned making some big changes last year to their supply chain, their go-to-market strategy for foods.
Yeah, that's right. They're aiming for a 20-25% compound annual growth rate to hit those revenue targets. Not going to be easy, but they're laying the groundwork.
And it's not just about top-line growth, is it? They want those profits, too.
You know it. Remember Beardo? That men's grooming brand, double-digit EBITDA margin already. That's what they're aiming for across the board.
Wow, so not just growth, but profitable growth. That's the dream.
It is. Shows you they're not just chasing shiny objects, they're building sustainable businesses.
Which makes sense, right? Long-term thinking.
Exactly. And that strategic thinking goes beyond just products, you know. They're transforming their distribution strategy, too, adapting to that changing retail landscape we were discussing earlier.
Project Say To You, right?
That's the one. Trying to find that sweet spot between those traditional mom-and-pop stores and the whole modern trade e-commerce world.
Yeah, they're not ditching their existing network, but they're not ignoring the future either. You got to strike that balance.
Right. It's about recognizing that success in India, it means mastering all those different ways of reaching customers.
And the fact they're investing in Project Say To now, even with all these cost pressures, shows they're serious about it.
No doubt about it. Another example of that long-term vision. They're not just trying to survive, they're getting ready to thrive.
Okay, so before we jump into their international business and the overall outlook, let's pause for a second. What's standing out to you so far about Marico? Financially, strategically, what are your big takeaways?
Lots to unpack here. We've seen some impressive growth, some pressure on margins, and a company that's not afraid to put their money where their mouth is, both in their core business and these new ventures. What's your take? What does all this tell you about Marico's health, their potential?
Yeah, it's a fascinating snapshot. They're facing challenges, for sure, but they're also making some bold moves. What do you think, folks? Hit us up on social media. Use the hashtag the deep dive. Let us know your thoughts.
We might even feature some of your comments on a future episode, so don't be shy.
We'll be right back to talk about their international operations, the overall outlook, and some final food for thought. All right, welcome back for the final stretch of our Marico deep dive. We've covered a lot of ground, right? Strong growth, some clever strategies, and this is a company that's clearly not afraid to roll with the punches.
Absolutely. Adaptable, for sure. But remember, Marico's story, it's bigger than just India. They got a whole international game going on, and that's a big part of their success.
Right, right. Their international business, it's like their secret weapon, almost.
Well, not so secret anymore. I mean, this quarter, they knocked it out of the park internationally. 16% growth in constant currency terms.
Okay, back up. Constant currency again, for those of us who don't speak fluent finance.
Right, of course. So just a reminder, it means even after you strip away all the effects of like the rupee going up or the dollar going down, their international business is still growing like crazy.
Got it. So 16% real growth no matter what the money's doing.
Yeah.
That's impressive, especially when you consider they're already doing so well in India. Where's
Yeah.
all this international magic happening?
Well, Bangladesh, that's their star performer consistently. This quarter, they hit 20% growth there in constant currency. And that's on top of a really strong year last year.
So Bangladesh is booming for them. Are they, like, too reliant on any one market, though?
That's a good question, but I don't think so because their MENA region, Middle East, and North Africa, that's on fire too.
Oh, yeah. How's that looking?
35% constant currency growth this quarter. The Gulf region, Egypt, they're both doing exceptionally well.
Wow, 35%. What's
Yeah.
the secret sauce over there?
Well, I think it's a few things. They've been smart about expanding their products, making sure they fit local tastes. And they've really invested in building those distribution networks, marketing campaigns that speak to each specific market within that region, not a one-size-fits-all approach.
So really tailoring it, doing their homework.
Exactly. And it's paying off.
But it's not just about growth, though, is it? What about profits in these international markets?
Well, that's where it gets even better. They're not just growing, they're growing profitably. Their international business saw its EBITDA margin expand by 100 basis points year on year.
Okay, margin expansion, another finance term we got to unpack. What's that really mean?
It means they're becoming more efficient. So for every rupee of revenue they generate internationally, they're squeezing out more profit. They're scaling up, but they're doing it in a way that's sustainable.
Got it, got it. So basically, a win-win.
Yeah.
Strong growth, and they're making more money on what they're selling. What's next for them internationally?
Yeah.
Any signs of slowing down?
None whatsoever. They've got big plans, diversifying even more, going into new markets that have a lot of potential, and just grabbing more market share where they already are.
Sounds like world domination is the goal.
Well, they're certainly ambitious, thinking long-term, trying to become a real global player in this whole consumer goods space.
Pretty inspiring to see an Indian company making such a big splash globally. Okay, so big picture now. Overall outlook for Marico, what's the forecast looking like?
So here in India, things are relatively stable, economically speaking. Rural areas are picking up a bit. Urban consumption is steady.
That's good news.
Yeah, but inflation is still a concern, even though it's cooling down a bit. That's the wild card everyone's watching.
Inflation, the great unknown, could throw a wrench in things.
Yeah.
But based on what we've seen today, do you think Marico is, ready to handle whatever comes their way?
Honestly, I do. They got a lot going for them. Big brands that people love, that diversified portfolio that spans different categories, different countries, and a management team that's shown they can adapt, plus they have a clear vision for the future.
They're not just riding the wave, they're charting their own course.
Exactly. And that's a good sign.
So as we wrap up this deep dive, what's the one big takeaway for our listeners? What should they remember about Marico Ltd?
I think the biggest takeaway is this. Marico is a company that's always on the move. They're not sitting still. They're constantly innovating, expanding, evolving. They're not afraid to embrace change, push boundaries, shake things up a little bit.
And that's what makes them so interesting to follow. Never a dull moment.
Here's a final thought, something to chew on. Marico, they're playing the long game. They're willing to give up a little bit of profit now in the short term to gain more market share, build stronger brands. Will it pay off? Only time will tell.
It's a gamble for sure,
Yeah.
but could be a big payoff down the line.
Exactly. We'll have to see how it all plays out.
Well, folks, as always, we encourage you to dive into those source materials yourselves, draw your own conclusions. We've just scratched the surface here.
There's a ton of info out there for those who want to learn more, and we'd love to hear what you think.
Absolutely. Share your takeaways with us. Hit us up on social media, #TheDeepDive.
Until next time, keep exploring, keep learning, and keep asking those questions.
That's what it's all about. Thanks for joining us on The Deep Dive.